You are here to fund financial innovation and access, and the fintechs are looking for funding. How come we haven't seen that massive investment happen? A lot of fintechs still complain that they can't access funding. What are you looking for, and people like in your space looking for, and what can the fintechs do to become to access funding more?
One is grant funding, and I would encourage all fintechs, especially those in their early stages, to research out there. There's quite a bit of grant money available in Nigeria, whether it's funded by international donors or it is funded by Nigerian organizations. There's quite a bit of money out there, and this doesn't dilute your ownership, the ownership of your business. So as a first stage, I would encourage a lot of people to take a look at that, and I think that's one thing that can help escalate the growth of fintech in Nigeria.
Funding for fintech and for organizations, what are their limitations? Why is it that for the last 6 years or thereabout, EFINA has been rolling out millions of dollars, and yet people are still complaining that there are no funds? What exactly is the gap that we need to close? The honest truth is, I think we need to look at the existing source of funding and talk about their limitations and see how we can quickly close that gap before we start thinking of alternative. Of course, everybody always wants the free money, but everybody that have been getting the free money, the question is, what have they done with the free money? So it's both demand side and the supply side. On the supply side, there is free money. There's also investors who are ready to put in money into any organization. But on the demand side, is the business that's sustainable for investors to consider putting their eggs in the basket for a great return? Don't forget, investors are not after any other thing but returns. So we need to come to the table and match both the demand side and the supply side together. Of course, there are a lot of opportunities, but we first need to look at the existing source of funding before we start even thinking of what could be those possible alternatives.
So there's a lot of education that needs to happen, both on the supply side and the demand side, to the peculiarities of the investor pool you're looking at. We don't even have a broad enough institutional base before we even get to the individual side. A lot of the local money that goes behind some of these fintech opportunities are from HNIs who are using it as a diversification opportunity. So oftentimes giants of business that have established a 30-year track record and are sitting on $200, $300 million worth of investable cash, and they're willing to break off $500,000 here or there, but they're just not a lot of those sort of people. Then increasingly, and I'm happy to see, at least we're now starting to see formalized family offices that have managers that have the understanding and the expertise to manage in this space. But in truth, a lot of it will take time because we're just not moving as quickly as we should. And then apart from that, even when some of these companies, there are not enough success stories in the market, because you see, at the end of the day, investors want return. And there's a natural competitiveness that goes on with every single investor. But so Jumia is doing a listing at some point, and you're right in that it wasn't funded locally. But if, for instance, Jumia did a listing locally, and then investors locally could see that actually I could 2x or 3x my money on these sort of opportunities, then of course it feeds the argument of future investments. Then people may be willing to say, you know what, I'm willing to, if I have a 100 million naira investment, I'm willing to do my 80 million naira in my standard traditional investments I'm aware of, and then my 20 million naira would be almost more opportunistic in this space that I have seen that other people have actually done investments in this space and have made money. But there's just not enough good stories, frankly. I mean, there's a lot of rhetoric, but there's not, oh, my cousin put 10 million and he got 30 million. And unfortunately, or fortunately, that's actually what drives a lot of investments. You can go beyond the books, you can do all the studies, you can do all the analysis, but it boils down to, actually, I want to make a little bit of money, and I've seen that other people have done that.
I'm very bullish on the African continent and Nigeria in general, and we are a startup ourselves. I have a strong background in investment, valuation, etc., but we are a blockchain technology startup, and we do fintech. We have 6 full-time analysts. We tokenize assets, equity, commodities, etc., and then we attempt to create liquidity from things that were previously illiquid. This is a perfect technology and business model to go into Africa, particularly with commodities and private equity. We've been doing some independent study in the African continent, in Nigeria, and we have some interesting things we've learned. The Nigerian Stock Exchange trades primarily stock and some fixed income, but the vast majority of economic value on the African continent is what? Commodity based. Okay, so that's where the money is, or at least that's where the perception of where the money is. This is the largest economy, and this economy and many other economies on the continent are slated to be the fastest growing economies in the next 10 years going forward. The problem is most investors are not good investors and they don't look forward, they look backwards. So everybody's still focusing on the China story, Southeast Asia, and that's where a lot of the focus is going. China has went from an emerging economy to an established economy to the second largest economy. They cannot grow nearly as fast as they used to grow. They already have wage inflation. There's already activity pouring out of China because China is too expensive to produce things into the tiger nations around it. China joined the World Trade Organization, had about 1.1 million citizens, and because it had so many potential workers, despite the fact its economy wasn't as efficient as South Korea or Japan, it became the second largest economy, eclipsing the EU. Right now, the continent of Africa has about 1.4 million citizens, 1.38, slated to surpass China. And it sits on top of the largest natural resource group in the nation, in the world. And the second largest is very, very, very far behind. Now, if you put this in perspective, what is the second largest source of natural resources in the world? Does anybody know? It's North America, United States. Actually, it is United States, but it's usually considered as North America. But the United States has the infrastructure to monetize those natural resources. Africa has much more in terms of natural resources, but the monetization, the economic value of those natural resources are funneled out to Europe, into Asia, mostly to the US, into Europe. US number 1, Europe number 2, Asia burgeoning as number 3. So our business model is to come to the continent, okay, and do several things. One, unite the 54 countries in the continent economically. So instead of trading against each other or with other nations, you trade as a Pan-African Economic Union, United States of Africa, number 1. That sounds difficult, but it's actually very easy if you have a common economic unit of account, which we feel we've solved. Number 2 is enlightenment and education. Where I'm from what I think is considered the financial capital of the world, New York City, Wall Street. It's awash with liquidity all the time. Okay, London is probably the second largest, Singapore, etc. It's been my experience when I try to bring capital over here, there's rampant discrimination. They say we don't want to do business in Nigeria. It's too far away. But they have no problem doing business in Dubai, which is much farther than Nigeria, or China, which is even farther. So that discrimination causes an automatic discount to assets in China. And I'm sorry, I'm jet lag. Assets in Africa, number 1. Number 2, there's not enough research regarding the opportunity. With enough research, open eyes, and then you have capital flow, and it's guaranteed. The reason is simple human nature, greed. Capital goes where it's treated best. People want maximum return on investment. Greed will overcome discrimination each and every time. That I can guarantee. So I have 6 full-time analysts, 1 manager for the analysts. I have a technology team. What we do is we take illiquid assets and we make them liquid by tokenizing them. Actually, I came to town to do a speech. So there is one asset that is rampant on the continent, but extremely illiquid. And almost all the value from this asset is realized outside the continent. And that is gold. This is a kilogram of gold. Very heavy. Okay, hold that for me. You take gold, you tokenize gold, you have basically a currency. What's special about that currency is that it's stable against every other current fiat currency around the world. All fiat currencies debase themselves because that's how central banks run economies. Gold is steady. That is how we plan on uniting all 50 countries. How we plan on bringing capital into Nigeria is through research. Okay, we will do research. If we find that you're worthwhile, I will give you startup capital directly, and then we will tokenize your shares, and then we'll attempt to list them on the growth board. We solve several problems that way. Number one, whatever we bring to the growth board is already vetted. So let's assume we're halfway decent in what we're doing. There's a 70% chance you will outperform the general main board. Liquidity not being taken into consideration, number one. Number two is if you can benefit from any of the technology that we own or develop, we'll lend that to you. Okay? And then number three, once you're on the growth board, you have an automatic gain. There's usually a minimum of about 10%, I think an average of about 17% of what you call liquidity premium, where the value of your shares increase simply because it can be bought and sold freely. Okay? And it can be bought and sold very freely because not only can anybody buy it off the growth board, but they can also purchase it through the blockchain. So now you have all the participants of the Nigerian Stock Exchange, you have all the participants globally through the blockchain. So now you can sell to Asia, Europe, North America, continental Africa, etc. So I think with a multi-pronged approach, being led primarily by research and understanding, you would have a flood of capital. And one more point. Like I said, because of that discrimination, you have a discount in equity in Africa. Once people realize, the growth potential and the fact that it's quite possible to monetize natural resources and equity and commodities right here on the African continent, people and investors usually overshoot the mark. So they overshot the mark on the downside by discriminating. You have a discount. When things get going, what's going to happen? They're going to overshoot on the upside. So you're going to get a premium. And that premium is when the economy starts to cook. Unfortunately, once the economy starts to cook, it turns into a bubble, which eventually will burst. And then you would have a recession, quite possibly a hard recession. It's happened in every single strong economy. The US, Korea, Japan, and it's about to happen in China. It's happening in China now, but they're very, very judicious with the economic information that's a nice way of putting it.